Well, we see the NSE 20 up 68% from its March lows of 2009. Many saying that what we're looking at is a market that's well supported at this point. What's your short-term outlook for the Kenyan Bourse?
I'm pretty bullish on the Bourse. I think we're coming back from a very, very egregious low base. I think we're showing very bullish trading patterns. Profit-taking rounds are pretty short-lived. And I think there's plenty of value in the Nairobi Stock Exchange. And I think you're seeing this narrative play out across Africa, which I think was raided for the last 2 years, pushed down to very low levels. And you're seeing a macro allocation back into sub-Saharan African equities, and Kenya is no different.
Well, when it comes to Kenya, we've had some investors noting some activity specifically from the National Social Security Fund. They're saying they're seeing signals of the fund having resumed activity. What indications have you seen of this? Because if this is the case, it could well be forming bulk of the support for this market moving forward.
Well, I think, the NSSF being sidelined was a big loss to the Nairobi Stock Exchange and also drove it to those lows that we saw to which you're referring. I think their re-entry would be very positive. I don't think they can stay out of the market any longer. Otherwise, they're going to really underperform on the numbers. So I think they've got to come back in, and you're seeing this herding happening to all the local institutions as well at the same time.
Well, for now, that massive profit-taking exercise we were getting used to in the latter part of last week coming to somewhat of a halt. Let's look at some of the companies making news in this context. We had Nation Media out with full-year results for 2009. The company posting a 15% drop in 2009 pre-tax profit. What was your overall analysis of those numbers?
Well, I think it was obviously a defensive year. Something like Nation is quite correlated to GDP. GDP was pretty weak all through last year, and I think minus 15% is not bad given the conditions that we saw last year. So on the whole, I think there's tremendous real estate in that franchise. I think they've got plenty to work with, and I expect a sharp rebound this year versus last year.
Well, in your daily market report, I was reading that you said there's plenty of valuable media real estate, like you've reiterated now, and the question revolves around actually leveraging of that. So what exactly are we looking at here in terms of potential and where this company can gain added leverage?
Well, clearly, when it comes to print media, they've got a dominant market position in the region. I am a little bit concerned at the speed with which the internet is changing the way people are digesting their news, especially in Kenya. And I think a lot of it will have to do with the mobile phone. So I think they've got to look at that. They've got a great internet property. Nation.co.ke is one of the most well-visited sites in Kenya and in the region. And they've got the TV network. So they've got all the platforms, but really I think we're seeing an inversion in Africa today where content is now king and platforms need to go and attract that content. And I think that's the question for a lot of these platforms, especially in East Africa. But there's plenty of real estate here on the Nation stable.
Let's look at it on a comparative basis, because if we look at other players within the space, we're looking at ScanGroup and Standard as well. On a comparative basis, who comes out as the better play right now?
Well, I think they're slightly different. I think Standard Group, the shares are very well held. It's very difficult to get any meaningful position on board in that group. So I think you've got to look at it in that context. They've taken a very bullish approach to new media. I think that's paying off. And I think ScanGroup is much more of an advertising business, a pure play advertising business. It's a copycat of WPP. And in that sense, I think that's the difference there. If I were looking at the three of them, which one would I like to play in? I still would seek out Nation because I think in terms of information, they are well positioned.
Well, talking about new media and internet accessibility increasing, we also had Access Kenya out with numbers. Broad overview there and market reaction to those numbers, Aly-Khan?
Well, I think, the management put out a very strong story about the fact that they'd had to spend 1 billion shillings, the depreciation, the extra interest costs. But essentially, when you're looking at Access Kenya, you're modeling a J-curve and you're trying to work out, will it kick in properly like a J-curve and when it will kick in? And I think the way I'm looking at it, it starts to kick in 18 months forward. It looks a little bit expensive on classic analysis right now at a PE of 27, But I think if that J curve kicks in, it becomes a very attractive morsel. And don't forget, there's a lot of activity now around Africa and internet and mobile assets. And I think Access Kenya is a very attractive takeover target at some point to somebody.
Well, certainly I was talking to Chris Sananu, who's the managing director of the company last week during Power Lunch, and he's certainly optimistic. But there are traders out there, and speaking to a few market commentators, they're saying that there are question marks around whether or not the landing of the undersea cable has actually benefited and is contributing to a higher traffic volume coming through Access Kenya. Are you seeing that coming through? Because Access Kenya is saying they have slashed prices and they are seeing higher volumes right now.
I don't think Access Kenya has ever sought to be a mass market player in the sense that Safaricom is. So when you look at their numbers, you're looking more at a niche player. They seem to me to have gone after Nairobi. They've created this very valuable metro fiber around the city. And do bear in mind, 60% of the Kenyan economy comes from Nairobi, so that's a clever play. And they've gone for what I would call the middle-class Soho folks, that particular class. So I don't think they're a mass market player. I think they're playing in a particular niche, which is really, I would say, upper middle. In that niche, they do have a good franchise.
Well, certainly that was reiterated by Chris Sananu as well. What does this mean then in terms of the fact that we are seeing players like Safaricom also concentrating on the data space more aggressively, the one not necessarily eating into the other's market share?
Then I don't think they're eating into each other yet. We're in a sort of blue sky opportunity. We're seeing an enormous growth curve, and I think both are playing to their strengths. But definitely, Safaricom is the dominant player. And one suspects if they chose to compete aggressively, they would be the winner. They haven't chosen to do that. They prefer not to compete on price. So I think for now, Access Kenya has a spot where it can carry on playing with to good effect.